What's up everybody, and welcome back to another video. And in this video, what we're going to be talking about is 4 of the best safe dividend stocks in my personal opinion. We're going to be going over why I like these stocks, why I believe the upside potential is huge, and why they are great potential adds to your dividend portfolio. So before I go any further, I ask that if you do enjoy this video, to make sure to give it a thumbs up and you subscribe. You turn on post notifications so you don't miss out on any future videos. I'm trying to give you guys as much value as I can. Now let's get into this video. So the first company we're going to be looking at is Store Capital Corporation, which is a REIT, a real estate investment trust. They currently have a dividend yield of 4.64% and a market cap of $8.91 billion. Looking on what this company does, they are an internally managed net lease REIT that is the leader in the acquisition, investment, and management of single-tenant operational real estate, which is its target and the inspiration for its name. Pretty much, they handle a ton of real estate. I want to say they have like 2,500 property locations. I believe I saw they were aiming to acquire 2,700 by the end of 2021. Looking on some more stuff, here's some dividend summaries. They currently have a dividend yield of 4.64%, an annual payout of $1.54 per share. They currently have a semi-high payout ratio of 82.8%, but when it comes to a real estate investment trust, a REIT, the payout ratios are always going to be a little bit higher because they have to pay out a lot of their profits to shareholders. They currently have a nice 5-year growth rate on their dividend of 5.9% and a current dividend growth rate of 6 years. Looking onto these just dividend history, you can see slowly and surely they keep continuing to increase these dividends. Now, unfortunately, we can see that they are having their payout date in 2 days. However, we did miss the ex-dividend date of September 29th of 2021. They will be paying 39 cents per share, which is kind of their increase. It was the increase of the year that we missed out on. However, you can buy some shares now and get paid in the next quarter, which is going to be paid out most likely in January of 2022. So start getting your dividend portfolio ready for 2022 and make it a great year. Looking on some more stuff, Store Capital outlook raised by S&P Global, which we're excited that S&P raised its outlook for Store to positive, underscoring the resilience of our portfolio during the pandemic and our healthy operating performance and credit metrics. Of course, this company had to go through the whole pandemic and a bunch of different things, which it might not have been the most incredible thing on the company's net income, but we can still see right here. Check out this. We look on the tables for their revenue. You can see $0.72 billion was made. Okay, that's their revenue. $0.72 billion, and we can see that their net income was $230 million, which is an incredible profit. Okay, that gives them a net margin of 31.26%. We like to see these companies be very profitable because when it comes to investing in dividend stocks, you're not gambling that a company will be profitable. You want to see that your company is profitable and going to be more profitable, which that is the way that I always like to go with my dividend stocks. Currently, Store has nice price targets. They currently trade at $33.21 per share. They have an average price target of $38.17, and their highest price target for a 1-year analyst price target is $42 per share. Incredible outlooks on the future of this company. Now, looking on just their revenues, to give you a visual look, check this out. Earnings in second quarter of 2021 was $62.4 million. First quarter, you can see quarterly keeps increasing slowly but surely. Annually, same thing. However, we know COVID happened. 2020 was a rough year for some companies, and Store was one of the companies that did take a hit, but they still had great earnings of $212 million. In the trailing 12 months, the revenue has been $720 million, so they are still scaling upwards and did not let COVID crash them. So, here is the second stock that is on this list, and that is ticker MO Altria Group Inc. I'm sure you heard of them before if you're a big-time dividend investor. I believe this company is one of the safest, highest yielding stocks out there. Currently, a dividend yield of 7.64% and a market cap of $86.14 billion, up 15% just this year. We can see some more stuff. Who is Altria? Through its subsidiaries, they manufacture and sell cigarettes, oral tobacco products, and wine in the United States. They sell a bunch of different products. It goes deep, hard into it. But Ultra is talking about they're kind of not necessarily stepping away from the whole tobacco industry, but trying to make it a better industry, more healthy, and better for their consumers and bring more value to the table. We'll see right here. They currently have that high dividend yield of 7.64%. Per share, they pay out $3.60. They have a semi-high to low payout ratio of 78% and a dividend growth record of 52 years with a 5-year growth rate of 8.59%. That is one of the top reasons I think Ultra is a nice buy right now, is their dividend growth consecutively for the past 52 years, making them a dividend king. Same thing goes for Ultra. We did just miss the ex-dividend date and the payout date. They paid out these dividends yesterday, which was 90 cents per share. Looking on some more stuff, we did miss the increase as well, but you can buy the shares now and hold them till next year, and you'll get another increase, most likely speaking, which is what we always want to see with these stocks. Next up, they currently are trading below their fair value according to Morningstar. You'll see right here, it says a fair value of $52, and they currently trade at $47.15 per share. Ultra is no longer a pure play on U.S. cigarettes. Over 15% of their valuation is derived from its 10.2% of Anheuser-Busch InBev of the consolidated business. 15% of its EBIT came from oral tobacco and wine in 2020. The list could keep going on. Although it's in a secular contraction, the U.S. cigarette market is a relatively attractive one. They do say that the volume decline rate will be about 4% per year. However, the ability to consistently price above the rate of volume declines should ensure that Ultra can continue to increase its revenue, earnings, and dividend. So it's always nice to see companies getting good forecast. Looking on Ultra's revenue, check this out. The trailing 12 months, $21.2 billion in revenue. Net income was $4.54 billion. Incredible stuff. A net margin of 21.37%. Their return on equity is currently 101.42%, which is an absolutely insane return on equity. We love to see this type of stuff in companies that we invest in. Now, on a visual aspect, check out the revenues for 2020, and 2019 was a tough year for this kind of entire tobacco industry as a whole. We'll go over that in the next stock. But we got the quarterlies. Q3 of 2020 was a rough quarter. They lost $952 million. But we'll see right here, Q2 2021, we're all back on track, making nice profits. $2.15 billion profit in one quarter, which is incredible stuff. $2.15 billion profit. That's not revenue. That's not whatever you might want to call it. It's profit. That's extra cash that they created into the system. Right now, they currently have a max forecast of $58 and a minimum forecast of $46. So, analysts, two strong buy, one buy, two hold. Looks pretty solid in my opinion. I like to see analysts with the bullish sentiment towards this stock. And the third stock on this list is Philip Morris International, ticker PM. They currently have a dividend yield of 5.23% and a market cap of a whopping $148.25 billion. Now let's talk about what this company does. PM is one of the world's leading international tobacco companies, headquartered in New York City as ticker PM. They have a workforce of over 71,000. They're building its future on replacing cigarettes with smoke-free products that, while not risk-free, are a far better choice than cigarette smoking. Look at all these numbers just to give you a nice little look. 930 R&D scientists, engineers, and technicians working on smoke-free products, 150 million consumers worldwide, 6 of the world's top 15 brands, including Marlboro. They are a conglomerate, huge upside potential with this company. More stuff to look at. We already talked about the dividend yield of 5.23%. Very, very solid. Same thing goes for Philip Morris. We did just miss the payout date and we missed the ex-dividend date, but we got it for the future and just keep being patient. Now the next thing is the payout ratio is semi-high, 82.09%, but whenever you have a dividend yield of 5.23%, you're going to be having a little bit of a higher payout ratio, and we're seeing Philip Morris with nice profits, which we'll look at in a second. The next thing to see is they currently have a dividend safety of a B and dividend growth of an A. This is a good score for these companies because most of them don't get past a C. Now you'll see right here, dividend growth streak of 13 years, which is an incredible growth record. Looking on past history, we did miss the dividend growth payment of $1.25. They increased their dividends by 5 cents per share. Looking on some more stuff, they are trading below their fair value of $108 per share, while they trade at $95.58 per share. This company, massive upside potential, my personal opinion. We'll look on some more stuff. Looking at their net income and everything, the trailing 12 months, they made $30 billion in revenue with a net income of $8.85 billion. Love to see a company becoming this profitable with a net margin of 29.43%. Big upside potential. Now, the fourth stock on this list, and my personal favorite out of all these stocks, I own the most of this company, is Realty Income Corporation, ticker symbol O. We'll go over why I love this company, and one of the reasons is they pay monthly dividends with a rate of 4.13% and a semi-low, well, it's a mid-cap, It's actually a little bit bigger than your technical mid-cap, but I like to think of it in the middle of the way, as with the market cap with $26.42 billion. Looking on the next thing right here, look at these numbers. Are these not impressive or what? You got diversified real estate portfolio, over 6,700 properties under long-term net lease agreements, 614 consecutive monthly dividends paid, 96 consecutive quarterly increases, 4.3% compound annualized dividend growth since 1994 New York Stock Exchange listing. 15.3% compound average annual total return. Incredible. 630 different clients, 50 states, Puerto Rico, and the United Kingdom. I love this company. The upside potential is huge. Dividend yield 4.13%. Payout ratio 82.07. They are a real estate investment trust, so you just got to kind of trust the process that this payout ratio is going to be a little bit higher. But 82% is still a conservative amount. Whenever it gets above 90%, that's whenever I get a little bit sussed out, you could say, and I'm kind of like, maybe this isn't worth the investment. However, dividend growth, very, very solid at 24 years. Make it one more year, and what are they going to be? A dividend aristocrat. We love to see this. Same exact thing goes for Realty Income. We just missed the payout date. Gonna have to keep this in mind. There is some times where dividends are just on top of each other and on top of each other. And next year at this time, hopefully you're getting these dividends from these stocks. Looking on the next thing, just check it out. They pay these dividends on a monthly basis. That's why these lines there's a ton more than the past stocks. Just look, 23 cents monthly. They just increased it to 24 cents per share. Now, looking on some more stuff. Morningstar analysis is saying, hey, guess what? Realty Income is trading below its fair value. Realty Income continues to grow through significant acquisitions rather than internal growth. Expanding this company horizontally, getting transitions, and Realty Income is the largest triple net REIT in the United States with more than 6,500, actually 6,700 properties that mainly house retail tenants, who are some of pretty much Realty Income's clients. You got top 20, 7-Eleven, Walgreens, Dollar General, FedEx. I could name the list, keep going on. Walmart. These are huge names in the list. Now, what is a triple net lease? Pretty much, it's a lease agreement on a property whereby the tenant or leasee promises to pay all the expenses of the property, including real estate taxes, building insurance, and maintenance. So this kind of takes the expenses on Realty Income and gives them a little bit of relaxing pressure, and it goes into their income. Looking on some more stuff as the net income and the revenue. Currently, they made $360 million in profit last year with a revenue of $1.73 billion, consistently increasing these revenues as time goes on and as they went through the COVID pandemic. Right now, we have a current price target of $77.67 per share as the average, giving us the stock 14.32% upside. That is one thing I can't stress enough. Please do not go dividend yield chasing. You need to buy stocks because they provide value and they pay a dividend, not just because they pay a dividend. But that is what I got for you guys in this video. If you did enjoy it, make sure to subscribe to the channel, give it a thumbs up, turn on those post notifications for daily videos just like this one, and leave a comment which of these stocks is your favorite, or whether you just love them all or you hate them all. I always like to hear your feedback. Check out my Instagram and TikTok. Links are in the description below. Check out the links for some free stocks, and I'll see you at the next video.